today I'm going to carry on where we left off. Remember, I'm going to send you a set of notes now because we've got the study guide. But what we did cover last week was all the basics. So we literally went through the FAC1601, which is the same in terms of background, with the new module that they have now, which is FAC1602, covering all the key topics from 1502. So you need your 1500 knowledge to do 1602 or 1601. Obviously 1602 now because they've changed it. So last week we went through all these notes. Okay, we went through all the background. Important here is that. Right. So why do we need the rules?
Because it helps us state which element it is and where they go.
Okay, good. So important is disclosure. From a FAC 1502 point of view, when did you do disclosure? At the beginning or at the end?
Beginning.
1502.
At the end.
At the end. So in 1502,
1601.
yes, 1502, you literally looked at all the separate categories, like PPE. So we looked at depreciation, adjustments, accrued expenses, prepaid expenses, all the things we looked at last week. Then, toward the end of 1502, you were introduced to disclosure, where you had to actually create the financial statements. How many statements do we have?
Statement of financial position, statement of changes in equity, statement of comprehensive income,
3,
owner's equity, cash flow.
Cash flow, 4. Good. Okay, so we need to know, where do these rules go? So where do you put your assets?
Assets, if they're increasing, they go on the debit side. If they're decreasing, they go on the credit side.
That's fine, that's the rule, but
statement of financial
where do we
position,
disclose
sorry.
it? Financial position.
Liability.
Income?
Income is changes, comprehensive income.
Comprehensive income. Liabilities?
Financial position.
Expenses?
Income.
Comprehensive income. Capital and drawings?
That goes to changes in equity.
Change in equity, good. Okay, so in terms of what we need to look at today, I'm going to look at the material because we've covered all the basics in the notes. So now we need to look at the detail regarding this particular module, which is the 1602. You can see here in the contents page, Learning Unit 1, Intro, Preparation of Financial Statements, which we've actually done already. Okay, that's like IFRS, that's the rules, that's the conceptual framework. This is what we need to focus on in terms of disclosure. So if you can do disclosure for a sole proprietor, you should be able to do disclosure for a partnership. The only thing different with a sole proprietor and a partnership is that you have more owners. So you'll have separate capital accounts and you'll have separate
entity
drawings accounts. You'll still have the same adjustments. You'll still have PPE. You'll still have accrued and prepaid expenses. You'll still have all those normal adjustments that you would have here, except you're presenting it for a partnership. That's the only difference. Right, then later on we'll look at these, which is change in ownership, CCs, and then cash flow we've actually already looked at. Okay, so maybe after we've covered the theory, then we need to just chat about next month and how many classes do you think you'll need, because it's a lot less now, so we probably won't even have to host that many to make sure that we still cover everything that we need to. Okay, so you can tell me how much support do you need next month. Okay. Alright, so the first bit is the overview. I'm not going to spend too much time on this. I'm just looking at the most important bits and pieces. Here you can see that they've even told you up front that this module 1602 requires 1502. Okay, we know that. The same thing applied for 1601. So it doesn't matter what module you're doing. Obviously we're doing this one, which is better because there's less that's tested in 1602 compared to that 1601. Okay, this is just overview of what you've covered already. So you can always go back to your 1502 books and you can reference things like adjusting a allowance, processing depreciation, doing a disposal. What else was important there? Bad debts, credit losses, those type of things. Okay, so don't overlook the basics because they're so important for this one. Okay, that's all assumed knowledge. Even like VAT, we need to know how to do calculations around that. This is 1602 and 1502. You can see they've combined the two. This is 1502, that's 1502, and then this is 1601, okay, which is this new module. that's fine, that's fine, that's fine, that's fine. And there we go, Learning Unit 1. So Learning Unit 1 is looking at the introduction to the preparation of financial statements. If I'm looking at preparation, we're looking at the creating of these financial statements.
Okay.
So these statements need to be created in line with what?
The IFRS.
Correct. Okay, and why is that important?
Because we need to be doing everything to the international.
Correct.
Or has to comply with the laws of the international accounting.
Yeah, so you can compare different companies because they're all following the same rules. Right, so it provides you with that consistency between businesses in different places.
Yeah.
Okay. All right, and then you've got presentation of financial statements, financial instruments. This is what you covered in 1502. They tend to test it quite often here in the 1601 because they look at things like fair value adjustments. Okay, what is a fair value adjustment? Do you remember?
Fair value is after depreciation, isn't it?
No, a fair value adjustment.
You adjust for
What
how
would
much
you
is
adjust?
land and buildings, vehicle.
Yes, those things can be valued, but they wouldn't be called a fair value adjustment because fair value looks more
so is
at
it more like inventory?
equity.
Okay.
Okay, so an investment in company A.
Okay.
Alright, so if you've got an investment in company A, that company can increase in terms of share price, and then you would have to process the fair value adjustment.
Yeah.
Right, so that we'll look at. That's something to recap. And then you've got some exercises and solutions. Okay. Right, so that's all theory. Just a little bit of intro. Okay, this we've covered last week in terms of IFRS. Okay, so I'm not too worried about this. This you can read through when you've got more time. I want to focus more on the application of the theory. Right, so introduction. First thing, describe in your own words what you perceive a framework to be. Okay, so a bit of recap. I'm just going to use this as revision for what we covered last week. Describe what the framework is and why is it important.
Isn't framework like the disclosure of what needs to happen?
Not quite. The framework creates the
Accounts.
not accounts, but it's like the foundation that the IFRS is based on, because that's framing how we do certain things. So here they talk about what you perceive the framework to be. Okay, so the rules, and then here they talk about the purpose of the conceptual framework, and and they say, would you say if it's similar to IFRS? So is the framework the rules, or are they two separate things?
They're two separate things.
Yeah, they're two separate things. So the framework is what we're basing everything on, and the IFRS is just the how we actually process things. Right, so here you can see they talk about a reference for the area that provides the theoretical background to test practical problems. Right, and then here you've got bullets relating to why we do certain things. So what's the purpose of accounting?
To help a business seeing if they're in a profit or loss.
So it's creating information, that's all. So accountants just do that. They literally take data, i.e. transactions, and they create a set of statements that gives us information about the business. So we can see how the business is performing, doing well or not doing well. Does the business have more assets or liabilities? Okay. Right, then they've given you a note here about communication. Right, we refer to the communication of financial statements as an accounting system. That's obviously false. We know communication is not an accounting system. Communication is how we express the information, which is the disclosure, the reporting. Right, so they're false, referred to as financial reporting. List the different components that are normally included in an entity's complete set of financial statements. You've already told me the different statements, so that's good. Objective is for decision making information, and then they talk about who do you think are the users that we spoke about last week. You get internal and external users. That's fine.
Bank shareholders, investors.
Yes. Okay, suppliers, creditors, debtors, all of them. Name the underlying assumption that is applicable to the preparation of financial statements according to the conceptual framework. Here they said going concern. In your, where's that printed copy of the assignment here?
I saw something about a going concern.
The first few questions there are theory. So you would have to then refer to this in terms of 1502's content in order to answer those theory questions. And that shouldn't be that difficult to do because it's literally just background information. Okay, there's no accounting here. It's all why we do certain things, what's the basis of preparation, all of that. You can see here they're talking about conceptual frameworks.
Because it says here, an entity with the intention to liquidate its operations may prepare its financial statements according to the going concern basis. Is that true?
No. How would that be true?
It can't. And firstly, they don't do liquidation in this module.
True. But if we're liquidating, that means we're going to go bankrupt. So if you're going to go bankrupt, it's going to carry on. Yes, that one's false.
Yeah, that's what I thought as well.
Yeah, but that's good. So we'll cover those things next week to give you a chance to do all the questions. I'm actually more interested in how do you approach the calculations. That's what I actually want to see. Okay, so it's 10 questions. The first few are theory. So it's like 8 or 7 calculations that you need to do. All right, so like do it like an exam, like a test, and I want to see what your workings look like. What's the approach? Where are you struggling? Where aren't you struggling? And see how that goes. Okay, so that's just theory relating to the accounting. Then they talk about the qualitative characteristics and the cost of reporting. Okay, again, it's background information that we've seen in the notes. Then they've got the elements. We know that assets are what?
Assets are resources that help with future economic benefit.
Okay, what is a liability?
A liability is an obligation. So a liability is a creditor. You're obligated to pay.
Yes, obligations key. Equity?
Equity is capital and drawings. Bobby, Bobby, come here. Bobby.
Equity?
Let me just pick it up.
It's fine. Equity.
Equity's got to do with the owners, so it's capital and drawings.
Equity does have to do with the owners, you're right, but equity comprises of how many different accounts?
Capital, drawings, expense, and income.
Yes. 4. Okay, so those 4 accounts affect the owner's equity because equity will either go up or
down. So it's profit or loss.
Exactly. So if we make a profit, what happens to the equity?
It increases.
Exactly. Okay. Right. So that's background C. Knowledge is important in terms of basic rules and principles. Then we just apply this to a different scenario. Okay. So even in their study guide, they've given you the definition for asset and liability. Right. And then equity here they described as the residual. Right. We know owner's equity can be calculated using assets and liabilities. Okay. So there's 2 equations. The one is A minus L. What's the other?
A equals owner's equity plus liabilities minus liability.
No, I'm looking at owner's equity. How would I calculate it? There's 2 different equations. So the one is this. What's the other one? You just told me that owner's equity comprises of 4 accounts. Yes.
Minus drawings.
No. Plus minus profit or loss.
Okay.
Okay, and how do you calculate the profit or loss?
Income minus expenses.
Exactly, and then less the drawings. Okay, so it's the capital plus the income minus the expenses minus the drawings. Okay, remember profit and loss we calculate from income and expenses. Okay, then you've got just a note about income and what that is. Then you've got a note here about elements and what's the appropriate financial statement. See, we know how important that is. Why? It's disclosure. You need to know where to insert all of those different accounts because that's how you get marks in the assessment.
So assets, liabilities, financial position, income, expenses, changes in income.
Yeah, we've looked at that. I actually tested you earlier. I asked you about them, so that's fine. Then we've got the measurement. So remember, measurement refers to the rands and cents, the amount. So last week we spoke about things relating to value. I asked you, how would you measure the value of an asset? How do you measure the value of an asset?
Over time.
Fine, you can measure it over time, but what determines its value? What is its value?
The appreciation.
That would
The carrying
affect its value. Yes, that's better. Okay, so carrying value is one way of measuring the value of an asset. And how do we calculate that? Carrying value is equal to cost minus accumulated depreciation.
Okay, yeah.
So for an asset that depreciates, the carrying value would be a better representation of the asset's value rather than what it costs. Because cost is when I buy the asset. So let's talk about the vehicle. So obviously you had to purchase a new vehicle because the one that you had was in a car accident. In terms of cost, is that going to change?
No.
That the cost is the cost is the cost. The day that you buy it, the vehicle will have a cost.
Yeah.
Okay, but is that going to be the vehicle's value going forward?
No. It will depreciate over time.
Exactly, and that's why you've got this.
Accumulated
Because next year the vehicle will be a year old. The year after it'll be 2, 3, 4, 5, 6, and so on. So the cost minus the amount of depreciation gives you how much the asset is actually worth today. Do you remember the two methods of depreciation?
Straight line and diminishing.
What does straight line use to do the calculation?
Carrying value.
Straight line. Straight line doesn't change.
It's diminishing that's got the
Carrying value.
And the depreciation.
Well, yes. Yeah. So the diminishing balance method uses the carrying value. Yeah, the columns stay the same for both. But if I'm looking at diminishing balance, I use
carrying value.
And if I use straight line,
the normal value.
Cost. Okay, because cost doesn't change.
Okay.
So the depreciation stays the same. Okay, then they've just referred to the textbook, obviously, to do more reading on the background regarding FAC1602. They talk about the measurements, that's fine. C, all different ways of measuring different things.
Okay.
Assets, liabilities, income, expenses, capital, drawings. Okay, those 6 accounts need to be measured and communicated in the statements.
Yeah.
So we can either use the historical costs, we can use realizable value, cost, present value, fair value. There's so many different ways of measuring that asset or measuring that liability. Okay, for a liability, you'd probably use the balance outstanding.
Yeah.
Okay, because do you agree I'm going to pay off my liabilities?
Yes.
So if you're paying off the liabilities, it's going to increase or decrease? Decrease. So the liability should, if you're paying it off, reduce its value. So that could be its current value or its realizable value or its balance outstanding. Okay. Well, then you've got notes about capital and capital maintenance. Okay, so capital is what?
Capital is capital.
Which is what?
Owner's
Describe
equity.
it. Well, part of owner's equity.
Capital is what the owners put into the business.
Correct.
For it to grow.
Yes. So if you start a business and you want to invest in it, that would be considered your capital contribution. Yeah. Capital is going to be maintained. So maintain could be different examples could have a different form of, let's say, inverted commas, maintenance. Okay. But the first thing I want to look at is we've seen the word capitalize before. What does that mean? If something is capitalized,
you include the depreciation into it. In the interest, sorry. You include the interest rate, and then that's the total you pay. Okay,
that's good. So capitalize means to add to the balance, the starting amount, whatever it was. So if I'm looking at savings, the savings would grow if the interest is capitalized.
Yes. Okay, versus
versus if it was paid out.
Yeah.
So remember, when we looked at some of those cash flow questions, the one we saw spoke about interest not being capitalized. So if interest is not being capitalized, then it's being paid out. Okay.
So capital maintenance. So let's say owner puts a vehicle into a business. That's a capital contribution. But would you see the maintenance of the vehicle when it goes forward yearly?
That would be an expense because that's a repair or a maintenance item for the asset. So that isn't what you're saying in terms of changing value. Okay, because if you upgrade or improve the vehicle, then that's seen as an increase in value of the asset.
Okay.
But repairs and maintenance would literally just be an expense because you're not changing the asset's value or you're just maintaining it, you're keeping it running, that's all. Okay, so just remember that repairs and maintenance is an expense, improvements is an increase in the value of the asset. Exactly. Okay, good. Okay, then let's just give you a bit of background about IFRS, which you can read through if you want to. That's all background information regarding the rules. Then they've given you presentation, talking about the objective of IAS1. IAS1 is just the disclosure. That's all it is. Okay, you don't actually look at these things because you weren't asked to buy those big rules with the standards. Okay, it just covers this one, disclosure. Disclosure means, for us, format. Is format important?
Yes.
Why?
Because you need the format for disclosure and trial balances.
UNISA's not going to give it to you.
Yeah.
So you need to structure your answer correctly.
Yeah.
And that's why it's important to know what those statements look like in terms of disclosure and content and information. Okay. Make a list of new definitions. Okay, that's fine. That's theory. Purposes, that's fine. We've looked at that. Considerations, we looked at that last week. The structure is the layout and the format. Identifying the statements, that you should be able to do. You mentioned the 4 different statements. That should be okay. They've described it here in their study guide. Statement of financial position. All I would do here is maybe just add that this has income. Not income.
Assets and liabilities.
Yeah, assets and liabilities. And then the other one has income and
Expenses.
This one has income and expenses. Right? And then you've got owner's equity, which is the changes in equity. That one. Capital and drawings with profit or loss. Because who's entitled to the profit?
The members or the owners.
The owners, exactly. So the owners will be receiving more if the business makes a profit, or they will be losing out if they make a loss. And if they draw, same thing applies. It would decrease the value. Owner's equity. And then cash flows, which is a separate chapter that we've actually looked at quite a bit. We will look at it again later on, maybe in terms of past papers, just to prepare for your actual test. Do you have the test date for this module yet, or has that still? Is that still outstanding?
Let me just get on my phone. I've got all of them. I've got 2 actually on the same day.
It's not this one, or is it?
No, it's economics and something.
Okay.
Let me just.
I'm just trying to understand in terms of like planning. Is this your first exam or your last exam? So
I'll let you know right now.
at least we've got an idea of how maybe hectic it will be or won't be, depending. So cash flows we'll look at again later on, closer to exams.
Yeah. of May.
That's not too bad. That gives
So
you
around-
over 2.5 months around.
But around the 7th, the 14th, the 15th, the 25th, the 1st of June, the 6th
it's
of
a
June,
lot,
the
eh?
7th of June, the 7th of June.
Okay, so it's one of the first few exams that you write.
It's the second, yeah.
Okay, which is actually better in a way. At least then you can get it over and done with, and then you can just focus on the study subjects. Okay, because this one is going to need quite a lot of prep in terms of doing questions. The others you mentioned were mainly theory, so that shouldn't be too difficult to do.
Yeah.
Alright, so a little bit of notes again in terms of what we covered last week. So in these notes that I had discussed with you last week in terms of like a starting base to make sure that we understand all the different concepts, here they talk about a financial instrument, which is what we covered in the notes, but I just want to recap what it means from a disclosure point of view. So what is a financial instrument?
Isn't it like the adjustments and disclosure of...
A financial instrument. So financial means it relates to finance.
Yes, instrument is what you use in order to determine. Okay.
Not quite. Yeah. So instrument is the type of financial instrument or or asset or liability that you've got.
Okay.
So a financial instrument could be something like shares or investments. Okay, or debentures. Okay, they're financial instruments because they are loans or assets depending on what you've chosen to invest or purchase or use. Right, so the definitions here, they're referring you to the textbook. It will be the 1502 textbook because in 1601 they didn't, so in volume, maybe just talk about volume. In volume 1, that was the 1500s, and in volume 2 would be the 1601. So you would need both because 1601's textbook, which is volume 2, doesn't cover this, the financial instruments. Okay. Alright, so make a list of the definitions that you count on financial instruments. That's fine, that's assets and liabilities. Okay, so in my notes, we spoke about a financial asset, a liability. We spoke about fair value and what this has in terms of accounting adjustments. Because remember, those financial assets or those financial liabilities are going to change in terms of its value. Right, so the value will either increase or decrease. And we process accounting adjusting journal entries to represent the actual value that those things have in terms of its fair value. Okay, that's what they're looking at here. Right, so let's look at an activity where you're going to have to do the debits and credits. This is just relating to the different types of financial assets and liabilities that you can get. If it's a cash deposit, is that an asset or liability?
Cash deposit with a bank, it's an asset.
Why?
Because it's money coming in, so it's growing your accounts, which is bank increases on the debit side.
Yeah, you could also look at it as meeting the definition of a resource. Right, if you have a cash deposit, it's yours, it's your resource. Inventory?
It's an asset.
Trade receivables?
Asset.
That's fine. Trade receivables is an asset. Trade payables?
Liability.
Yes. Loans receivable?
Expense.
Be careful.
Loans?
No. Think about it carefully. Loans receivable.
It's an obligation to pay, so it's a liability.
Is it an obligation to pay?
You're receiving a loan, so obviously you have to pay it though.
But it's a loan that's receivable.
So then an asset.
Yes, because who's giving out the loan?
The company.
Yes. Okay, so if you're going to be giving your customers a loan,
of course.
are those loans receivable?
They are, but what happens if you don't get paid for it?
Then that would be bad debt. Okay, because a loan receivable account would be similar to trade receivables. Okay, if it was a liability, then it wouldn't be loans receivable.
Loans payable.
Exactly.
Okay.
So if something is payable, there's an obligation. If something is receivable, that there's a resource.
Okay.
Alright, so generally, you can look at it that way. Okay, something that's receivable is going to give you benefits. That means it's an asset. Something that's payable, more likely than not, will be a liability. Because
obligation to pay for
you're
something.
going to have to lose benefit or pay for something, which is payable.
Yeah.
Right, and payable meaning there's an obligation. It hasn't been paid. Bank overdraft.
It's a expense.
No, it isn't.
It's an asset.
No, it isn't.
It's a liability.
Why?
Because it's something you have to pay. It's bad
Exactly.
debt.
No.
But isn't bank overdraft when you
Not bad debt.
But isn't bank overdraft when you spend money and you don't have the money in your account?
Yeah, that's not bad debt. Bad debt is when your customers don't pay you. Okay, a bank overdraft is when you don't pay the bank.
Yes, and
and you
you don't.
owe the bank. Okay, so an overdraft is when you have an account that allows you to use more than you have.
And then you have to pay back.
It's like a credit facility. Okay. PPE.
Property, plant and equipment. Assets.
Trademark.
Asset.
Prepaid rent.
Asset.
Income received in advance.
Asset.
No.
Expense.
No.
Liability.
Why?
Because you've received something, but you still need to work for it. You haven't worked for that money you received, so it's an obligation.
Exactly. There you go. See, just related to the definition. VAT payable.
Liability?
Yes. Okay, if something is payable,
It's always a liability.
probably going to be a liability.
Receivable asset.
Yeah. Okay, and they just group it into financial assets, financial liabilities, or other. Right. The reason why they do this is because not all of these things here are financial assets. Because here we're looking at financial instruments. Financial instruments. Okay, so financial instruments are special assets that you would have to disclose separately. Okay, this is not too important because you'll see when you approach questions, the disclosure is quite specific. So you don't really have to differentiate between if it's a financial asset or a financial liability or if it's other. The reason being is that assets are assets. Assets will be under the assets section of the statement of financial position. What is important is it a current asset
Or non-current.
or is it a non-current asset? Yeah.
How long or short it is.
Yeah, that's probably more important. And then you would list them all there and you'd list them all there.
Yeah.
Okay, so yeah, just a nice summary. If you do decide to go through this again in more detail and just read what UNISA has given you in their study guide. Okay, then here's measurement of financial assets and liabilities. That's important. We spoke about it in the notes where we had investment in shares. Okay, so if I'm going to be buying shares in a company, what am I going to debit, what am I going to credit?
If you're buying shares in a company, would it be seen as an asset firstly?
So debit what?
So won't the two accounts that be affected shares?
Debit or credit? Why?
Shares is an asset, it's going to be debited.
There you go.
Because
Okay,
it increases on the debit side.
there we go. So now you would say investment in shares A, B, C, doesn't matter. Debit, and then what would we credit?
Won't it be bank?
Yes. Okay, because you need cash to
So
buy
it
the
increases,
investment. Exactly. Okay, good. Alright, so here they're looking at those types of considerations. Right, if you're going to be buying or investing in a specific asset or liability, we're going to be debiting or crediting those accounts. Okay. Something else they'll cover here is a fair value adjustment, which is going to be processed through profit and loss. That's why we have that fair value adjustment.
So fair value will be seen at the end though, because you
Of
don't know
course.
if you have a profit or loss until you've done it.
Yeah, so you look at the beginning and you look at the end.
Yeah.
And remember, you need to determine, well, did the asset increase or decrease in value? If it increased in value, what would you do to the asset? Increase it.
Yeah.
If it decreased in
You're gonna
value,
decrease.
decrease it, exactly. And then you'll either have an adjustment for a fair value profit or fair value loss, which is called a fair value adjustment.
Yeah.
Okay. Okay, we need to work through some examples now. Hopefully they've given us some nice examples here. Okay, this is theory relating to the conceptual framework. Okay, so I'm not going to worry too much about this. I do want to test the measurement though and the recording, so the disclosure, that's more important. Okay, in terms of exams, they're always going to ask you those types of questions. Okay, I doubt they'll test too much of this. If they do, it'll probably be part of the multiple choice, short questions. Right, the only thing is we don't really know what 1602 is going to... Yeah, because they haven't given you anything to work from. What else did they post on my UNISA other than this and the tutorial letter?
That's it, and then they said they...
Did they give the students anything to like refer to in terms of exam papers? Because if not, that's not a problem, because I can obviously pull out things from 1502 and 1601 and say, well, okay, this is a disclosure question, this is a partnership question, and then we can practice that way.
Official study material.
Now, I'm just curious to know if UNISA would provide that assistance with
But they don't give
yeah.
past papers.
Obviously knowing that this is a new
it's
module.
giving me an error, so they're having a problem now with UNISA.
Okay, yeah, don't worry, it's not a problem. But yeah, I doubt it. So we'll just use what we have. Okay. Alright, that's theory. Okay, there we go. Here's the first calculation bit.
someone asked, one of the students was like, hi there, just want to find out if there'll be past papers.
It probably won't.
There won't be.
But you never know.
I don't think they've written the subject. There won't be.
Yeah. Okay.
Like there's nothing that they can refer to.
Yeah, things have changed. Okay. Alright, so there's an example for you to try. Before I discuss it, I want to see what your approach is. Okay, so let's see if you would be able to record these transactions in the general journal. Okay, general journal just means...
So it's debit and credit.
Yes, so debit column,
so
credit
it's
column.
going to look just like that.
Yes, and then you'll have debit here, credit here, and you'd have writing, and then you would have an amount here, amount there. Like that.
So it's going to be first what
That's just your workings, basically. It's your workings where...
So it's going to look like that thing below.
Yeah, so you would debit something, like debit bank, credit capital.
Okay, so where are the...
Okay, yeah, this bit over here, I want you to interpret before we discuss. Okay, and then we'll look at what stands out in terms of approach. Okay, so let's see how that goes. Alright, so you've read the scenario. Okay, when you see a scenario like this, when you see multiple dates in a question, you should be looking at what?
The beginning and the end.
Drawing up a little timeline. Okay, so that's exam technique or tips in terms of approach. Right, so generally you would want to draw up a timeline when you see multiple dates in a question, because that does affect the way we present the information or the answer in this case. Okay, so they say 1st January 2016, B purchased 500 shares of 1,000 each in A. Okay, so what am I going to do? I'm going to write 1st of the 1st 2016, and I'm going to say buy here 500 shares. I'll just put 500 there. Okay, then I continue reading. A company listed on the JSE. It was announced in the popular press that A obtained the patent rights to develop an improved household solar geyser system. That's just background information. There's no accounting there. The purpose of the investment is to trade in the shares of A Limited. So if you're trading in the shares of A Limited, is this a financial asset? Yes, and it's very short term because you're buying and selling the shares in this particular company.
Within a year though. So
it's,
so it's a current asset.
Yeah, it would be short term, it would be current. Okay, the transaction costs amount to 5,000. So that's also something to remember. Why? It gives me information relating to a expense. Okay. On 31st December 2016, the end of the financial year, B, the shares of A were trading at 1,125 per share. Right, so that's really good.
So
that's 31st?
Yeah, of the 12/16.
End of the year. Okay, so they want us to record the transaction. So recording the transaction means start here.
Yeah.
Okay, so if I start there, what happened on the 1st of the 1st?
I purchased 500 shares of 1,000 rand each.
Good.
So it's going to be 500 times 1,000.
Yes, that'll be the total amount that you would have to disclose in the journal. So I'm scrubbing this out so I can put that here. Okay, so I want the accounts though. Okay, earlier we spoke about it, so you gave me bank there.
Bank
and then investment in A. Okay, or shares in A, it doesn't matter. Okay, investment in A, shares in A. How many shares did you buy? 500. And that was worth 1,000, so 500,000.
Yeah.
And 500,000. And that's it. There's your first transaction. Okay, did anything happen during the life of those shares? No, but there were transaction costs. So what is a transaction cost viewed as?
An expense.
Good. What do you do to an expense?
It increases on the debit side.
Okay, so how would you represent the journal? Debit what? Credit what?
Credit bank.
Good.
Debit expense.
Yeah, but you need to give it a name. So share.
What's it?
Share maybe you can talk about share expenses or purchase expenses or share issue expenses or something like that. So I'm just going to write down share expenses or share issue expenses. Doesn't matter. Okay, but that's the cost of buying the shares, 5,000. So 5,000 debit, 5,000 credit, and that's it. Another one complete. And then what happens at the end of the year?
The shares were traded at 1,125.
Is that good or bad?
It's good.
Why?
So it's increased by 125. So what you're going to say is 500 times 1,125.
500 times 1125.
Yeah.
Yes, but you're only looking at the difference. Why only the difference?
Because that's how much. So will it be 500 times 125?
Yes, but we're looking at the value. So there's two things here. Okay, the value at the end of the year, the asset. Do you agree?
Yeah.
At the end of the year is worth how much?
1,125 per share.
Correct, which is how much?
500
500
times 1125. It's 562,500.
562.5. 562,500.
So then what you say 5 minus 500,000.
Yes. Okay. So, but remember, this 56250 is going to go where? Statement of financial position. Because at that date, at that point in time, this is how much we have as an investment. Right. Is that what we started with? No, we started with 500,000.
And you
made
a profit of 62,500.
Yeah, so the profit was what we derived over that period.
Yeah.
So we have to debit or credit what?
We have to debit bank.
No, we're not receiving cash.
Debit shares.
Yes. The
Credit
value
bank.
of the investment is going up.
Credit bank.
No, the bank
what would you
isn't going
credit?
down.
What would you credit?
Well, let's think about it. What happened? The value of the shares went up. So what are we doing to the value of the shares? We're adjusting it.
Yeah.
So it's a fair value adjustment.
Okay.
Is that an income or an expense?
It's income.
It's a form of income because you derive the benefit from those shares that increased in value. Okay, so debit the investment, credit the fair value adjustments. Okay, so there's the first bit. There's the investment. Okay, UNISA has joined these two transactions in one.
But
it's better to show it like this.
They'll still give me the mark.
Yes, okay, we've split this in two because we've showed transaction costs separately from the investment. Either or, doesn't matter. They've just tried to save space in their solution. Right, and then here's the fair value adjustment. And then you've got everything. Okay, obviously they've just processed things to profit and loss because they're assuming you're closing off the books of the entity. Okay, they didn't say process closing transfers, did they, or did they?
No.
Oh, they did. Okay, in brackets they said remember to do the closing entries.
Okay.
Alright, so if they said that in the question, then I would have to just close it off to profit and loss, which is what they did there.
Yeah.
Okay, those two are the most important.
Yeah.
Alright, so can you adjust for an adjustment in fair value for a particular asset?
Yeah.
Right, here's another one. IAS 1, exercise 1.3, talking about disclosure. So where do we start? We look at the required. Disclose the machine and related costs in the financial statements of V at 31st December to comply with the requirements of IAS 1. That just means disclosure and presentation. Accounting policy note is not required. Okay, you'll never need to write down the note because you require the statements in terms of IFRS in order to do that. They just want you to tell them how are you going to record the machine and its related costs in the books of the business.
Yeah.
Okay, so this is testing your understanding of value. How do you recognize an asset in terms of its value? Okay, so again, going to give you a chance. Try answer that, and then we'll discuss. What does the required say?
Disclose the machine and related costs in the financial statement of Vindu at 31st of December
There's the key. Okay, disclose the machine and related costs in the financial statements.
That will be the financial position statement.
Yes, so now we need to look at statements and
Okay.
extract. Not that you can do as workings, but you're not going to get any marks for the answer because the answer must be a disclosure
Yeah, but
financial
how do I
statements.
set after? Sorry, yeah.
So you would just write down. Let's do it here because there's more space. Statement of financial position. Statement of comprehensive income. Okay. Extract if you want to, because it's not the whole thing, it's just part of it. Extract. Okay, extract, and then you're going to obviously disclose. Okay, so V imported a gem cutting machine for a jewelry business from China. She purchased the machine for 1.2 less a 10% trade discount. That's very important. When you see that, you need to remember what a trade discount is from 1502.
Yeah.
A trade discount is a reduction in selling price. So what is she going to record in the books of the business?
1,080.
Well, 1.2 less 10%. Okay, and then she said she also incurred the following cost to get the machine installed and ready for use on 1 March 2016. So now I know that the machine was bought on April
the 4th.
16,
Yeah.
and the year end is 31st December.
12, yeah.
16. Right, so now you know you bought something here, and that's the year end. So the start of the year would have been 1st of January. So that's the financial year. Do I care what happened before the date of the purchase of assets? No, because it has nothing to do with the current period, which is what I'm actually going to be looking at.
Yeah.
Right, so I'm only going to be focusing on this bit of the year. And how many months is that? April, May, June, July, August, September, October, November, December.
Sorry. April, June, February, March. April, May, June, July, August, September, October, November. That's 9 months.
Right, so now you know that this asset is with us for 9 months. Do you agree?
Yes.
Okay, what happens on that date? Bought.
She bought.
How much does she buy it for?
1,200. Well, 1,080.
Yeah, 1.08 million. Okay, let's keep all the zeros there. Alright, so 10% of 1.2 is 120.
Yeah.
Okay, then I need to take that off the price which I bought it for, which is 1.2.
Yeah.
So this is going to be the cost price of the asset that was purchased on that date for that year.
Okay.
What else did you incur to get the machine installed and ready for use?
Import duties, freight costs, so that's how they get it there, installation cost, advertising.
Okay, so what are we going to do with those costs?
You're going to include them.
Why?
Because it's what happened when she was buying the machine, what incurred.
Are you going to include all of them?
Yes.
Why would you include the advertising cost for qualified machine operator?
Okay, but then you need the freight cost, that's how it was delivered, import duties as well as installation.
Why would you need the advertising costs? Or why wouldn't you need the advertising costs? What do the advertising costs relate to?
Getting business for her, getting new clients, so business.
Advertising costs for a qualified machine operator. Who needs to operate the machine?
Someone who's qualified.
Yes. You're advertising for someone.
Yes.
Does that relate to the machine?
No.
That's totally separate. Okay, so I'm only going to include these costs in line with the cost of the asset. Because remember, what does the property, plant, and equipment theory say? I can't use the machine if it's not installed. I can't use the machine if it's not at the premise.
Yeah.
So import duties, I need to pay for getting this machine. It came from another country. Freight costs, if it wasn't transported, exactly. If it wasn't transported, I'm not going to be able to use it. And installation, or if it's not installed, I can't use it. So this, according to the theory, which is relating to historical cost. Okay, we spoke about historical cost when we looked at inventory. Inventory, you do the same thing. Okay, if I buy stock and I pay for the travel, I need to include it. Okay, so if I'm buying inventory, or in this case buying a machine, am I going to record those costs as being part of the cost of the asset when I buy the asset?
Yes.
Yes. So you're going to add those costs to that amount. Okay, so what is that added together?
So
9, no, that's 1, 5, 7,
3
50, 50, 61.
Oh, I added to the 1080.
Okay, yeah, that's fine. So you just added 61,000 to that. Just take 1080 plus 61. 1080 plus 61.
Let me add, okay, it's 24,000 plus 35,500.
32.
Oh, sorry, it's a 32. 32 plus 4, 5.
Should be 61.
Yeah.
Okay, so 61 is right, and then
Plus
61 plus 1080.
1080, 2, 3. Yeah.
Yeah, so that's fine. Okay, so that gives you 1, 1. Let's don't write it there because that's going to confuse things. Okay, so on that date, I've got 1, 1, 4, 1.
Yeah.
Exactly. Do you agree? That's at that point in time. But where do they want me to disclose this information?
Statement of financial position.
At what point in time?
At the point it was bought.
No.
Oh, the 31st.
Yes. See, the required tells me where I'm going to show the information. So how am I going to show the information at the 31st of December if I'm sitting here? I need to take that there. Okay, so what happens to an asset over time?
It accumulates.
What?
Depreciation.
Depreciation, exactly. Okay, you using it, right?
Yeah.
So if you use the machine, will it increase in value?
Decrease.
Exactly. So now, how am I going to get the depreciation for this asset?
The straight line method.
Good. What's the rate?
Would I use the 1080? Oh, 20%.
Okay. Is there a residual value?
Yes, 5,000.
So that means that I'm not going to depreciate all of this 141000 because a portion of it is a residual value.
Yeah.
So 141000 minus residual value divided by, well, 20% is 5 years, so divide by 5. Or, if you want to, times by 20%. Okay, does that make sense? Depreciation. When did I start? On the 1st of April.
Yeah.
Where am I? 31st of, so highlight that. That's year end. Okay, this whole question asked you to show everything when? At year end. Okay, so that's the important date that I need to look at.
So it's going to be 1140 minus 500. I mean 5,000.
Yeah, times 20%.
20.
Did you have it for the full year?
No.
Only 9 over 12 months. See, that's how they get this.
Times 9 divided by 12.
Did you get 170?
No. Okay, I didn't. Let me
Try again. Something went wrong. Put brackets if you need to.
That's what I got.
Yeah.
Then you'd have to do it as 400.
No.
No.
Try again. Open brackets.
So it is.
Open brackets.
Yes.
1
4,
1 1 1 4
114. 1
1
1 2 3
minus 5
minus 5,000.
close brackets
Yes.
times 20% times 9 over 12.
12. Yeah.
Okay, that's better. Alright, so what does that represent? The depreciation.
Yeah.
So that means you started here, I started there, and I ended here. Okay, so the value of the asset there will be what? Cost minus accumulated depreciation. Does that make sense? Okay, so what's cost minus accumulated depreciation?
Cost minus accumulated depreciation is a carrying
So what do I show in my books?
The 170,400.
Minus what?
This
No, that's the depreciation. So you're subtracting that from
So
what?
it to be 108,000 minus that.
No, not the 108. What is the cost price of the vehicle or the machine that you had? The cost
1,2.
price. No, the cost price was the 1141.
Oh, it's that one. So it's that minus that.
It's this minus the depreciation.
Okay.
Okay, because you started and you ended.
Yeah.
So I bought the asset. I need to know what was in the actual purchase price. That's why I drew the diagram. Okay, so let me write a nice, neat one here. Okay, 1141 was when I started.
Yes.
This comprises of the purchase price with the import, with the freight, with the installation.
Yeah.
Makes sense?
It does.
Okay. Then I'm looking at disclosure where? At the beginning or at the end?
At the end.
Exactly. So from there to there, that's 9 months. So is the asset going to be worth the same in 9 months? No, of course not. Okay, so what did it decrease by? There, the depreciation.
Yeah.
Okay, so there's the disclosure. Statement of profit and loss, you're going to show what? Your expenses.
Yeah.
This is an expense that relates to the asset. Advertising we spoke about. Remember we said we're not going to show that as part of the cost price of the machine because it's not for the machine, it's for a person to come work in the factory. Okay, that's an expense. Non-current assets, there's your PPE. This minus that is the carrying value of the assets. Cost minus accumulated depreciation gives you carrying value.
So it's 970660.
Okay, that would be an extract. So see, these are extracted line items. Okay, this would be part of a bigger question. This is just one little scenario from a big question.
Yeah.
Okay, because the question that you'll see in the exam will have many different adjustments, not just one. Right, and then they've given you a note here. Remember, notes can be asked for, but they don't often give you the notes because the notes you would have covered in DLTA 1502. Okay, I don't know how much of the notes they'll give you in this module. I don't think it would be too much because they are going to test the other subjects. So they'll test partnerships, they'll test cash flow. So to have to test the note as well, it's going to be repeating what they've already tested in 1502. Okay, in 1502 they've already tested the notes, and then you had a PPE note. But the PPE note is very straightforward. You're literally just taking the information that you had from where? Here, the diagram.
Yeah.
That's all you're doing. You're taking this information and you're recording it appropriately in the PPE note. So this was the cost.
Yeah.
That's what I started with. This, in terms of carrying value, which is there, is what I end with. Right, so that's the start. That's the start minus depreciation for 9 months gives you the carrying value at the end.
Yeah.
Okay, so just to show that, the carrying value at the 1st of January, obviously this was 0. Why?
Because
you didn't have anything.
No,
okay, remember, this was 1st of April and we were 31st of December. So each financial year is 12 months long.
Yeah.
Right, so zeros there. They shouldn't have put X's here, they should have put 0, 0, and 0.
Yeah.
Okay, then you've got the additions is what you bought, disposals, nothing, so that's 0. Depreciation is what you sold, and then this they should have put in.
So is that how I would have to set it out?
If it was a note.
Okay.
If it was
and
a
if
note.
it was a statement of financial position?
Then you would show it like this.
Oh.
Okay, you would show it
how you worked it out and everything.
under the non-current asset section. The workings you do separate. Okay. All of that's my workings. Okay. I label it big, workings, and then do all the workings separate.
Okay.
And then in your answer, you would just show that.
Okay.
Okay, because that's all they asked for. Right, and that was that. Here they're just debating the advertising cost, which we spoke about. Okay, so that's another example done. And there we go. That's the end of Chapter 1. So Chapter 1 in terms of scope, from a 1602 point of view, most important here is, do you know what a financial asset and financial liability is? Do you know how to adjust the fair value in terms of increasing or decreasing the balance?
Yeah.
And then the last thing here was just disclosure in terms of your property, plant and equipment. Okay, you can see they're telling you in their study guide, make sure you know how to adjust something in terms of fair value, make sure you know how to process depreciation and disclose it on the statement or in the notes.
Yeah.
Okay, because if they've given it to you in their study guide, which is what they've given you, and this is a new study guide, it's 1602. So we need to look at their study guide and see, well, okay, they want me to know how to do this and they want me to know how to do that.
Yeah.
Okay, so those are two things that you need to take away from the first study unit. Okay, and that's what I literally went through with you now in terms of the examples in the textbook. Okay. Alright, then we've got this, which is financial statements of a sole proprietorship, which is all disclosure. Next bit is looking at disclosure for this, a sole proprietor. In terms of reference, you would have to refer to 1502, and you would have to look at study unit 15, which was the consolidation of all the different separate study units. Okay, that's what you would have to look at in order to cover learning unit 2 in terms of reference. Or you'd have to go back to your textbook, volume 1, and you'd have to look at disclosure. So learning outcomes, key concepts, introduction. This is theory regarding how we create sole proprietor. And notice here, financial statements, exactly. Okay, so this section is looking at disclosure. Right, this is what I want to look at in terms of NB. Focus and approach to make sure you're showing the things correctly. That's important. Right, and then self-assessment later on. Okay, so let's check what the first bit is. Learning outcomes, key concepts, introduction, C. Referring to 1502. So make sure you do go back to your notes there and just reference and revise that. Establishment of sole proprietor, one individual running a business. Exactly. That individual is going to have capital and drawings and a profit or loss. That makes up their owner's equity. At the same time, they're also going to have assets and liabilities, and this also makes up the owner's equity. So this owner's equity is the same as that owner's equity. You've just got two different equations for it.
But they've got they don't have separate legal entity.
There's no separate legal entity. There's no continuation. There's unlimited
because
liability. If the person is gone, the person's gone. The business is gone. Okay. But when looking at transactions, the same accounting principles apply. Same as a partnership. Same as anything else. Okay. So if I'm looking at this transaction, I want you to analyze and interpret and give me the journal entry for it. So journal entry means debit, credit, whatever the accounts are, debit, credit the amounts. Okay, so what are you going to do here?
The first one was 2001. JM invest 25,000 to JM Spas or Supplies. His investment consists of 3,000 cash equipment valued at 8,000 and motor vehicle. So won't your bank increase?
By how much?
25,000?
No.
Or is it going to be the 40,000 plus 8,000 plus 3,000?
Come basics. Interpret the transaction.
So there's
what stands out?
Invests.
Who's investing?
The owner.
Good. What do we call that?
Capital contribution.
Yes. It's in the form of what?
Equipment.
And?
Cash.
And
motor vehicle.
Yes.
Okay.
So now, debit what, credit what?
So you're going to do them separately. Debit, motor vehicle.
Fine.
Credit, spas or supplies.
Who's contributing?
The owner. So you're going to decrease his value. So it won't be
No.
JM.
You won't
credit him
decrease the owner. It's the owner's business. So what is the
Okay.
business going to record?
what the owner gave.
Exactly. What do we call that?
Capital contribution.
Yes.
So won't it be credit capital contribution?
Yes.
Okay.
That's better.
Okay.
Okay, so debit what, credit what?
Debit vehicle, credit capital contribution.
That's one. So debit 14,000, so
Yeah.
you'd have vehicle, you would have capital contribution.
Yeah.
Okay, you'd have 14 there and 14 there.
Yeah.
What else would you do?
Debit equipment,
Good.
credit capital contribution.
Yeah, so debit equipment, and then you would have 8 here and 8 there.
Yeah, and then debit cash,
No, well, you could call it cash, you should call it bank, yes.
bank, and then credit capital contribution.
Exactly. Okay, that's what they've done here. Okay,
Okay,
there's
no,
it,
that's
there's
simple.
it, there's it, there's it. It's simple now,
you
like
need-
we've discussed
that
it, but you
only-
need to
yeah.
practice it.
Yeah.
Okay, because asking you straight away,
Yeah.
initially, you
didn't know.
a bit rusty. Okay, so this is the basics in terms of 1502. We need to worry about the disclosure. So this is not that important. Okay, why? Because I'm not going to be getting a general journal. I doubt it. Okay, they're going to be looking more at the disclosure. So I want to know, where do I disclose that? Where do I disclose that? Where do I disclose that? And where do I disclose that? That's more important. So where are you going to put bank?
On the debit side,
Where?
it's asset save our financial position.
Good. So in the statement of financial position, picture it. Under the heading assets, you're going to have non-current and current.
Current, yeah.
Which one?
Non-current.
Bank.
It's current. It's
Bank is current.
Yeah, sorry.
So under current, you're going to have what?
Bank.
The word bank,
yeah.
and you're going to have
the
5,000.
amount, yeah.
Okay, where are you going to put equipment?
Current.
No.
Non-current.
Yes. Non-current what?
Asset.
Good. So picture, statement of financial position, disclosure, big word assets. Underneath that, non-current.
Yeah.
Underneath that, equipment with the amount.
So motor vehicles will also be a non-current
Good.
asset.
Capital?
Current.
No, it's not.
Capital is a liability.
No. Capital is not a liability.
It's bank.
Capital is not bank. Capital is
Capital contribution.
capital.
Okay.
How many rules do you have?
6.
Capital is its own
So
account.
then it will be under statement of changes in equity.
Yes.
Okay.
Okay. The capital will be disclosed
Okay,
in the
sorry.
statement of changes in equity in its own column called
Yeah.
capital.
Okay.
It would also go in the statement of financial position, but under the heading equity.
Okay.
Okay, can you picture those little
Yeah.
like headings?
yeah.
Yes. Okay. Right. Here they're giving you theory relating to the statement of profit and loss, other comprehensive income. They want you to study the textbook in terms of format and layout. This you can go through. There's nothing so important there. Let's look at another example. Based on prepare the layout of gross profit section. Okay, so what does the gross profit section look like in the statement of profit and loss and other comprehensive income? Get a plain sheet of paper there, and I want you, if this was an exam, to give me a skeleton of the statement of profit and loss and other comprehensive income. So this thing, okay, so this would have been the required that the examiner is going to ask you for in the exam, and then you are going to have to build a template to answer the question. I want to know what it's going to look like, and I want you to put as many stuff as you can in.
It doesn't have to deal with profit, and so will it be gross profit?
Well, I want to know what your template looks like. Okay, so write on the heading, statement of profit and loss and other comprehensive income for the year ended 28 Feb 2017. Underline that, and then I want to know what your template would look like. Because, see, that's what you would start with in the exam. In the exam, you start by drawing the skeleton up.
Yeah.
Okay, and assume this, because this does make a difference. Okay, remember, periodic is generally preferred in terms of the examiner's testing, because the periodic requires more calculations. rather than the perpetual. Perpetual requires less calculations, and it's generally easier to do. Okay.
All I know that goes under those profit and loss is income and expenses.
Okay, so what would the structure look like?
Other income, other expenses.
Okay, well, write down what you think it should look like, and then we're going to check. See, this is basics in terms of format. That's something that you need to learn. Okay, so sales is the first line item. Okay, so cross that out. In the statement of comprehensive income, you would write down the word sales or revenue, either or. Then you would write down what's after revenue.
Cost of sales.
Yes. Okay. Cost of sales will have a separate calculation, so you'd have a working for that. So asterisk cost of sales.
Yeah, isn't that
C separate working for periodic. Okay, then what's next after that? Sales and cost of sales gives you what?
Gross profit.
Good. So now draw a line because it's a subheading. So sales, cost of sales, a line, just one line. No, up underneath here. That one. All across, and then you write down gross profit. Okay, so I'm going to give you numbers, my own. Revenue is 1,000. Cost of sales is 500. Gross profit is what?
1,500.
No.
1,000. It's 500.
Yes. Okay, you need to show it correctly. So show a column with the rands amounts. Okay, and then write in the amounts. Okay, you're not going to get the mark for cost of sales.
Yeah, because I gave it.
No, because you didn't write it correctly. Cost of sales must be what?
500.
Positive or negative?
Negative.
Ooh, see? Okay, that's important. Okay, because it's sales minus cost of sales is gross profit. So 1,000 minus 5 gives you 5.
500,
Okay, afterwards you can write all these other income expenses. So see, there's the cost of sales, there's the revenue. Okay, here, this was the asterisk that we made, and we said
C. The one that I normally.
See the periodic system. Okay, because this is periodic.
Yeah.
Okay, opening stock plus purchases minus whatever else plus carriage on purchases or anything else minus closing stock. See, this bit over there is periodic. And that you need to draw up. Okay. Either on the face of the statement like they've done it here or separately. Okay, so maybe NB on the top of this. Study the format, refer to page 29 as an example. Okay, you have to know these not equations, but
no, but I know
formats,
how that quite well.
Okay. Because you need to structure your answer. This is the structure. Then you've got the little total column. Then you write down gross profit, and that's it. Next bit is obviously they don't even go that far. I'm going to add more here, and then after that you would have your other income.
Yeah, and other expenses.
Yeah. So we need to add more. Then you'd list all of them. Then you'd have other expenses. See, this is not even complete. And then you'll have all the expenses, list them.
Yeah.
And then at the bottom, you'll have profit for the year.
Yeah.
Or loss for the year, depending on what you get. And that will be under 2 total columns like that. Okay, so we can even add a bit more there. So just give me some examples of other income.
Prepaid income.
Other income. Rent income. That could be one example that would fall underneath that. What else?
Salary.
No. Salaries would be an expense for a business. So under other expense, you could write salaries and wages. else?
Rent expense.
You could have that. Give me more income and expense accounts.
Income. Sales.
Sales at the top already. Can't have sales again. What other income could you get?
Accrued. No.
No. Accrued, prepaid, all of that, those aren't income or expenses, they're adjustments.
Yeah.
What else could you get? Just random income and expense accounts. Give me more.
Investment shares?
No, that's an asset.
Interest payable?
Interest
Receivable.
payable,
Receivable.
no. Receivable, no. Payable is a liability. Receivable is an asset. Interest, yes, but interest income or interest received. What else? What other income and expenses do you get?
Expense, stationery.
Stationery, yes, good.
Telephone.
Yes.
Electricity.
Yes. Okay, so expenses are there are a lot. Okay. Where would you put profit on sale of an asset?
Profit on sale of an asset, other income.
Yes. Okay. Where would you put depreciation?
Expense.
Good. Alright, so this is just what you could see in a question.
Yeah.
Okay, let's get the format right. Okay, so normally I like using two columns. So draw another column here, a small one. And let's make up our own numbers. Alright, so rent income you would write in this column on that line. Rent income is 10. Rent income is 10. So in this column is 10. Wrong line. Rent income is 10. Interest received is 5. Profit on sale of an asset is 15. Okay, how much does that add up to?
25, 30.
Okay, so where did you put the 30?
Yeah,
no.
The other income.
There. No, other side, yes. The total goes there. Okay, let's write down some random figures for expenses. Salaries and wages, 2. Rent expense, 3. Stationery, 4. Let's just keep it simple. 5 and 6.
So that's 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20.
20, correct. That's it. See, you still lost the mark. Don't forget. Okay, expenses are
decreasing.
Negative, so they need to be in brackets.
Yeah.
Okay, finish it at the bottom. Profit for the year or loss for the year?
10.
Which one?
It's a profit.
The profit's not 10.
Is it that minus?
That plus that minus that.
Okay, so it's 530, 510.
Yes.
And it's going in that column.
Yes. And that's the final copy. Double lines, and you call that a profit for the year. Okay, so profit or loss, it would be profit for the year. You would call that last line profit for the year. Okay, and that's what it would look like. That would be a sample statement of profit and loss and other comprehensive income.
Yeah.
Okay, so that's what the structure looks like. Right, so when you do that assignment, okay, you're probably going to have to refer to a statement or something to get the figures that you need to get the answers. Okay, so if they do want you to draw up the statement, draw up the whole statement. Okay, even if they're only asking for like one little point. Okay, because those are practice examples. Okay, so when I do it next week with you, then I'm going to show you the approach. Okay, but I need you to do it ahead of time so I can see what you did, so I know, okay, this needs to be, like now I can really tell you, you need to study your format.
No, I will.
Okay, you have to know the format. Okay, this is important.
Yeah.
Okay, because why? You're not going to have this.
No,
you're going to have to create this. Okay, all these line items come from
disclosure.
a question that might look something like, okay, here they don't give it to you. Okay, so here, another important layout or format, statement of changes in equity.
Yeah.
Okay, what does that look like? Here's the template.
Yeah.
Okay, so what must we put? Balance at the beginning, profit, any extra capital, minus any drawings, balance at the end.
Yeah.
Okay, so let's draw that up. Okay, heading, statement of changes in equity. Don't have to write the date, you can just write statement of changes in equity. It'll obviously be for whatever date the question gives you. Okay, but I want to know, what does this look like in terms of layout and format? What's the first line item in a statement of changes in equity?
Capital.
Well, balance.
Yeah.
Beginning of the year. So balance, beginning of the year.
And then you've got one at the end of the year as well.
Yes. And then what's in the middle? What could you have in the middle? What affects the
capital contribution?
Yes, so additional capital contribution, good.
Must I just put a heading additional?
Yeah, you would just write down as is and then whatever the amount is. So we'll put amount.
Okay.
Balance at the beginning of the year, let's say it's 100.
Just 100.
Yeah.
So capital contribution.
Capital contribution, which is something additional, let's say that's 200. What else could you have?
Drawings.
Yes, so that'll be a negative, right?
Yeah, you're drawing up the company.
Exactly. Drawings decrease the value of the business. Let's say drawings is 50. What else could you have?
Tax?
No. No tax for a sole proprietor.
Oh, so yeah, I'm thinking.
Well, what else would we have?
Expenses?
No.
Well, it's capital, drawings.
Think logically about the business.
Income?
Well, income would be part of what calculation?
Capital.
No. Income is not part of capital. Income is separate from capital.
So it's profit or loss?
Yes.
Okay.
Okay, so let's say there's a profit. So you'd have profit for the year.
Profit.
Let's say profit for the year is 150. Okay, draw up your totals. So total there, total at the top.
Right, yeah.
Yeah, so just put a line there for the, and then a line there at the bottom. Okay. Right, and then show the disclosure.
So won't you say 100?
100 will go there.
200?
Yes.
50? 150?
Yes.
Then you have to work that out.
Yeah.
So it's 100 plus 200 is 300, 250. 250 plus 150 is 400.
Okay.
So there it will be 400.
No, it wouldn't. There it'll be 400.
Oh, sorry, at the end, yeah.
Okay, so it's beginning of the year,
Yeah.
changes, end
And
of the
then,
year.
okay.
Okay. Right, there's the example.
Yeah.
Okay. Statement of financial position, same thing. Here they've also given you a note about the notes. Right, so what does this look like? Here's the example. Did they give you one? Hopefully. No, they didn't. Okay, so not a very good 1602 textbook, because they gave examples for statement of comprehensive income. Then they gave an example of statement of changes in equity. I would have liked to have seen an example here.
Financial position
E.g.
has to do with assets, current assets, non-current assets. Then
Yeah, so let's make our own. Okay, so on the new page, statement of financial position. Okay, you're going to have assets.
Current, non-current.
Good, so under that, write down non-current, current. Okay, and then underneath all of this, you'll have a section for equity. And then skip a line, you'll have a liability.
Can't you put equity and liability?
No, it's normally, well, you can keep them separate, you can group them, but you still have to show them separately. So equity and then liabilities. Under liabilities, you'd have non-current and current. Okay, and then we need to show totals. So for assets, you're going to have a total. For this, you'll have a total. Okay, in your template. So let's show that. Underline assets. We're going to put in random figures. So we'll just put 2 for each. Current assets, write down debtors and inventory. Okay, under current, write debtors. And just a note, when you do this, non-current normally should come before current. Okay, but it doesn't matter now, but just try. It just looks better. It looks a bit odd when current comes first. Okay, but it's fine. Debtors and inventory. Okay, let's make our own amounts. Okay, so again, draw 2 columns.
Yeah.
See, this is just practicing the format and the layout so we get the template right when we answer questions in the exam. Okay, so debtors is 5, inventory is 2.
So it will be here.
Good. And then current is 7.
There.
That side, yes. Okay, non-current, write down land and buildings and vehicles. We'll just put 2 again. Land and buildings, maybe make it 20. Vehicles, make it 5.
So it's 25.
There we go. Okay, and then what else do you need? Total here. Okay, it's now a big total. So now, underneath there, write down big total assets and then draw lines across the whole thing. Total assets. Okay, draw a line right across the bottom and the top. Okay, how much is the total assets going to be?
25 plus 7 is 32. Okay. So it will be there.
Yes. Okay, now under equity, we will just have capital because it's a sole proprietor. Okay, capital, I'm going to make it 15.
But it will be there.
Yes. Okay, just remember capital will be open brackets, capital plus profit or minus loss, okay, minus drawings. Right, that's how you would get it, and that would be 15. Okay. Liabilities under current, let's put creditors and bank overdraft, just as 2 examples. Okay, your creditors will make, let's use 5, and your overdraft will make 2.
So that will be 7 there.
Yes. The 5 and 2 should have gone in the other column.
Oh, okay, but it's liability and the increase on the credit side.
No, this has got nothing to do with debits or credits. It's just working and totals, yeah.
Sorry.
Okay.
That was not it.
Under non-current, we'll just put mortgage loan. And make your mortgage loan 10. Good.
Then it's going to be
total equity and liabilities. Big total, and then you add your liabilities and your equity. Be careful, liabilities are what? 7 and no, it was right. What was your current? What's your liabilities?
17.
Yes. So highlight that. Current and non-current gives you liabilities. Okay, and then so how do I get this bit here?
17 plus 15.
Yes, is
32.
So you want that to equal that.
Okay.
Okay, because owner's equity must equal what?
That must equal that.
Or assets.
Assets minus liabilities.
Yeah, assets minus liabilities, or the other one, assets equal owner's equity plus liabilities. Okay, so if I take equity and I add liabilities, which is what you did here, those two should be the same. That's why they ask you for the whole thing. Alright, and then you've got, there's it there. We just spoke about it now actually. And then we've got adjustments. Okay, there we go. Adjustments, NB. See notes from last week. We covered this.
Okay.
I'm still going to send you, after today I can actually do it, last week. Okay, because now I've got the nice template, then I will just put it all together and say, well, this is what you need. Print all of it and then you can study from those notes. So inventory we looked at, depreciation we looked at. Expenses payable are called accrued expenses. Prepaid expenses, income receivable, that will be called accrued income.
Yeah.
Just a different name for it. Accrued income, accrued expenses. Income received in advance or prepaid income, that's great. Credit losses is bad debt. Allowance for credit losses, something we also know. That's what? Negative asset. Allowance for settlement discount received. Settlement discount received is what? An income. Discount received is something that we receive. So if it's an allowance for a discount, it's going to be a
negative asset.
No. Discounts that you receive come from where?
Income.
No, from who? The debtor or the creditor?
The creditor.
Discounts received comes from the creditor.
Yeah,
So it would be a negative liability because it reduces the liability.
Okay.
Allowance for settlement discount granted. Discounts are granted to who? Debtors. So that'll be a negative asset. Okay, so those are important adjustments that you've got in your previous module, this 1601. We just need to recap when we get there. Okay, we'll do more examples. Alright, so the last bit is just an exercise here. And how much else do what else do they give you here? Okay, there's the solution. What else do they give? There's the notes. Okay, they give 1, 2, 3. Okay, that's great. Okay, 3 examples. Alright, so I'm going to give you, can I give you some homework to try do it? Alright, so I want to know what the adjustments are. That's the key. I want interpretation. I mean, you've got the solutions here, so I will go through a sample exercise from start to finish. But before we look at the disclosure, you need to get the basics right. Okay, so homework, first thing that you need to do here is I want you to read down the list, and I want you to tell me what is this, an asset, liability, an income, an expense, capital, or drawings. That's the first bit of homework. Okay, we need to know what we're dealing with. No adjustments there, so that's an easy exercise. Okay, that one's short. In exercise 2, they've given adjustments here. I think I did see them, yes. Okay, see adjustments. So in the adjustments going down here, so from 1 to wherever it ends, I want you to give me the workings. Okay, in terms of what do I debit, question mark, what do I credit, question mark.
Is that all you need?
That you won't see in the answer. Alright, because that's interpretation. So remember, the textbook gives you question, gives you answer.
So
we need to fill the gap.
Give you the debit and credit?
I want to only see the workings. That's it. Okay, so maybe jot this down so you don't forget. Okay, so exercise 2.1. Let's go back to that page. There's it. 2.1. This is page 32. Identify what elements are in the trial balance. That's all. That's quick. That's going to take you maybe 10 minutes, 5 minutes.
So that's drawings, capital.
Yeah, it's capital, drawings, assets, liabilities, income, expenses. Okay. It's the accounting elements, the 6 rules. Okay. That was exercise 1. Exercise 2 is this starts on page 36. 36 and 37. I want you to do workings, which is what? Debits, credits, okay, for the adjustments. That's all. Okay, so go down that list of adjustments and tell me what stands out. Okay, packing material. Bank. Capital. Whatever it is. And then I want you to tell me, what do I debit? What do I credit? And is it going up or is it going down? Question mark. Okay, that's your interpretation. It's like what we did for some of those other examples. Okay. And then we've got one more example exercise. Let's have a look at it. There's it there. Okay, here they've given you adjustments again, same thing. Workings. I want to know what the workings are for the adjustment. So debit what? Credit what? And important is the why. See, that's application of the theory. Okay, so then you're going to do that ahead of time so that when we go through this, Okay, I'm going to show you how to actually present the information.
Okay.
So I'm going to take, what you did. So as we go through your answers to check, we will create the solution. So
Okay.
you can see how we take the question and we create the solution. It all comes down to how well you know the basic rules. Okay, that's so important. Right, that's why I said when we started that the rules from this page, okay,
Yeah, so important.
very important, because that's all I need. I just need to practice, practice, applying what the definitions are to the different transactions to record them correctly. That's all. Okay, so we need to make sure that you can do that by going through these extra examples. And these might even be examples that we've done before, either in 1502 or 1601. I don't know if UNISA has especially created new content for 1602, or they've literally just copy-pasted from all the other modules. Okay, I don't know. It doesn't look like ones we've seen before. Mr. Door, I don't remember having a door in one of the examples. This is for platoon. There might be different examples. Okay, they might even have come from past exam papers, possibly.
Yeah.
Okay, in order for them to create this. Then I think that wraps up this chapter.
Perfect.
Yes, it does. Okay, so a little bit extra homework just to do. It's nothing much. It's easy. It's mainly workings. Shouldn't take too long. It's important to do working so that next week we can look at the actual application, because then I want to show you how do we take what's here to answer this, which is the required. Because if you can take what you've got in terms of workings, it's simple and easy to process it through that. Okay, you'll even see when we go through it, you'll be like, oh yeah, I remember doing this in 1502.